Good morning, colleagues. Welcome to the Guyana Business Journal Caribbean Policy Consortium presentation, Guyana Upstream, a Rystad energy and industry country benchmarking update for Guyana. I'm Terrence Blackman, Associate Professor of Mathematics at Medgar Evers College in the City University of New York and founder of the Guyana Business Journal. And I'm joined by Dr. David Lewis of the Caribbean Policy Consortium and Manchester Trade Incorporated. Today's presentation, the result of a comprehensive assessment of Guyana's current oil and gas position done by analysts at Rystad Energy, will be led by Rystad's Senior Vice President and Head of its Latin American operations, Shriner Parker. Rystad Energy is the premier independent energy knowledge house. The report contextualizes for key stakeholders and audiences recent developments in the oil and gas industry in Guyana and the competitiveness of Guyana's oil and gas industry in the context of governance and the energy transition. It examines how Guyana's oil and gas industry can compete in a world transitioning from fossil fuels, Guyana's exploration success and future developments, long-term sustainability of Guyana's deepwater oil and gas, and value creation for Guyana's government and companies, and most importantly, Guyana's governance of natural resources and development. Following Shriner's presentation of the key findings from the report, we will be joined by Arthur Deacon, Joel Bagwindin, and David Lewis for a panel discussion. Let me take this opportunity to welcome you once again and to invite Dr. David Lewis to offer a few introductory remarks, which will be followed by Shriner's presentation. Dr. Lewis.
Thank you, Terrence. Good morning to everyone watching us in Guyana, in the United States, internationally. Joel Bagwandin, thank you for joining us from Georgetown. Shriner Parker with Rystad with an excellent report, which we've all been sort of salivating for over the past few weeks because of the news that this was finally coming to press and public. And for all our listeners and participants, you will be eventually receiving a copy of the report once it's finalized for distribution. It will be posted on the website of the Guyana Business Journal as well as of the Caribbean Policy Consortium. We're very pleased to co-host with the Guyana Business Journal this second white paper webinar, as we call them, bringing to the public new developments in research and analysis regarding really just for lack of better words, the Guyana miracle in terms of energy development, particularly in the oil and gas sector, but really looking beyond, as was discussed in terms of economic growth and competitiveness, governance, the whole balancing of the natural resource management, and what this means for really what, I always keep in mind to everybody, the number one per capita oil and gas destination in the world today. Guyana, people need to remember, is a very large Caribbean, South American country, but the population is under 1 million people, 750,000 people. And what this means in terms of management, in terms of economic growth, and at the end of the day, in terms of improving the development economy of people in Guyana is just amazing. So we're very pleased to have this second white paper webinar and being able to join with the prestigious firm of Rystad and look forward to Shriner's presentation. So thank you, Terrence, and we can go forth.
Thank you, Dr. Blackman and Dr. Lewis, and really appreciate the opportunity to share the findings from our white paper analysis. As you may know, Rystad Energy has been following the Guyana oil and gas story from the beginning. And through our different white papers, we seek to inform the public and the wider industry about the happenings in Guyana. So I'll share with you today some of the key findings from the report. This is sort of the table of contents that we'll go through, and I'll start with the executive summary. There are 4 key messages that we really want to emphasize from this white paper. The first being that Guyana will go from a frontier exploration play to a top 5 global exploration producer in the next 5 years. Guyana is leading in terms of offshore discovery since 2015 with 11.2 billion barrels of oil discovered, which is a significant amount, although we estimate that there is still significant yet to find potential. And of course, with the current developments and discoveries, we forecast Guyana to reach 1.5 million barrels of oil equivalent production per day by 2035, which will propel Guyana to become the 4th largest oil producer in the world in the offshore context, ahead of the US, Mexico, and Norway. The second point that we want to highlight in this report is the fact that Guyana represents material value and growth for both the government of Guyana and the international oil companies. So if we look at the government take from oil and gas production, we're estimating that that will reach $7.5 billion per year by 2030, amounting to a cumulative sum of $157 billion by 2040. We'll get into some more details in the later slides here. The third aspect that we want to call attention to is the fact that Guyanese deepwater production is advantaged when it comes to the energy transition because it has both the necessary and sufficient conditions to be a long-term source of supply, which are low emissions intensity of the barrels and low-cost resources. If we look at the average break even in the Stabroek block of $28 per barrel, which includes future development, we can conclude that Guyana is well positioned as an advantaged supply source in all of Rystad Energy's energy transition oil demand scenarios. Then couple that with the fact that the emission intensity of Guyana's production is only half of the global average at 9 kilograms of CO2 per BOE. And we expect these emissions to decline further as the future developments will continue to use state-of-the-art FPSOs. The final aspect that we wanted to highlight is that Guyana is taking steps to implement the best governance practices in order to harness ONG revenues to promote broader economic development. And I think it really says something that Guyana is ranked very high in comparison with most other non-OECD countries in the World Bank government's dimensions, which we'll get into, although there may be a little bit of work to do. So moving a bit further into the presentation, I want to talk a bit about the exploration success and future developments. I think this slide is probably pretty familiar with everyone who's been following the Guyana oil and gas story. 0 discoveries before 2015, and since 2015, 26 discoveries and over 11 billion barrels of oil equivalent discovered in Guyana. Now, of course, the vast majority of these discoveries have happened within the Stabroek block and specifically within the southeast corner of the Stabroek block. Outside of Stabroek block, there have been 4 discoveries, 3 of which have been deemed uncommercial. And the Kawa discovery is being evaluated to understand the commerciality. That doesn't mean that there won't be drilling outside of Stabroek. Of course, there will. And in fact, the industry is focused on a new emerging discovery trend line parallel to the primary trend, which we think will increase the probability of encountering commercial hydrocarbons within the yet to be drilled wells. But when it comes to Stabroek, you really could say that it's the most prolific exploration block of all time, particularly when it comes to exploration success rate, with very, very few dry holes being drilled, really bucking the international trend of a 20% success rate when it comes to discovery wells. So something that will go down certainly in history. Now I want to kind of switch to looking at the current picture and then the forward picture. So if we take the top 15 offshore oil producing countries in 2022, sort of the usual suspects that you would see, Norway in number 4, the United States number 5, Mexico number 6, and Guyana ranks as number 20 for this year at 200,000 barrels a day of production. But if we fast forward to 2035, Guyana becomes the 4th largest offshore oil producer in the world at 1.7 million barrels a day of production, outpacing traditional offshore provinces like Norway, the United States, the United Kingdom, and Mexico. So a really incredible story that is forming here in Guyana, and something that's going to put Guyana on the map of the oil and gas scene internationally. I then want to look now at the sort of production outlook for Guyana. And what we've done here is divide this into producing fields, which you see on the bottom, Liza 1 and Liza 2. Then in yellow, the fields under development, and then in green, the pre-FID discoveries, and finally the yet to find volumes in blue. So with the already sanctioned deepwater assets, we estimate that Guyana will yield 500,000 barrels of production a day just from Liza 1 and 2. And if we include the pre-FID discoveries as well as the projects under development, we get to that figure of 1.7 million barrels per day by the 2035 time period. Now, of course, we can't look at this without considering the yet to find potential. And as denoted in the blue stripe on the right-hand axis, if the yet to find potential materializes in the way that we assume, and this is a risk figure, then we could propel Guyanese production to over 2 million barrels a day by the end of 2030 and beginning of 2040. So really an impressive amount of production coming in a short amount of time. And I think if you consider discovery to first oil for Liza 1, and then extrapolate that kind of development for the assets under development and the pre-FID assets, this production curve looks very realistic. I also want to discuss a bit about the associated gas, because this is an important part of the story. Traditionally, for offshore associated gas, that gas would be either flared or re-injected into the reservoir to help support reservoir pressure. Within the Guyanese context, this will be a little bit different. Of course, you still do have to do some re-injection, again, to shore up that reservoir pressure. But I think both ExxonMobil and the government of Guyana are very keen to avoid flaring where possible and to utilize the gas for the betterment of Guyanese society. And that's the reason that this gas to power project has materialized. And we think that bringing gas back to shore is almost a sure bet. And the material difference that will make for Guyana is huge. 90% of Guyana's power demand is currently supplied by generation using imported diesel or heavy fuel oil, which are both expensive and involve higher emissions. So being able to utilize this associated gas within the Guyanese power sector is huge, and it's going to significantly lower the cost of electricity and therefore allow for development of different industries within Guyana itself. Now I want to kind of skip into the value creation metrics for both the government and the companies. At Rystad Energy, we've estimated a 59% government take. And then what we've done in the graph that you see to the right is we've taken the Stabroek block and we've modeled it in different countries according to the different government takes that you find in these companies, and then what that represents in terms of actual money. So as you can see, Stabroek block, if it had been discovered and developed in the United States, the U.S. would only be getting about 40% government take, Suriname 47%. And those figures are quite low in comparison to the 59% that we see in Guyana and that kind of total government take of 41 billion. Now, of course, there are countries that rank higher in government take, including Brazil and Norway. But I think it's important to mention that Brazil and Norway are very mature oil and gas regions, particularly in the offshore area. And as such, they can command a higher price, or rather a higher government take, because of the maturity of the play there. When the Stabroek block PSC was signed, there were 0 discoveries and no commercial oil and gas in Guyana. So it was absolutely imperative to be able to offer fiscal terms that were attractive enough to bring an operator to the region, to the country, and say, yes, I'll take this risk on in a rank exploration sense. So I think if you look at the peer group that we've set here, Guyana is very well positioned in the government take aspect, and is actually higher than the average for the peer group at 59%, the average for the peer group being 54%. Then we can talk about the Guyana government take, which we estimate will reach $7.5 billion per year by 2030. And again, that $157 billion by 2040 cumulative. It's important to note that when we say Guyana here, we're talking about only the Stabroek Block, in the sense that only the Stabroek Block just now has assets that have been deemed commercial. But you can see in the left-hand graph, what we're showing in the black line is the free cash flow government take, which is represented there on the bottom. And then we're also breaking out the OPEX, the CAPEX, the pre-tax cash flow, as well as the gross revenue and the free cash flow to the companies. And I think it's interesting to see here that in this next several years, there is a large CAPEX commitment that has to be realized on part of the operator. But certainly with the emphasis that Exxon has put on developing the Stabroek Block in Guyana, we see this as being quite realistic. And again, this is something that we think is going to create significant value for both the government and the IOCs that are present. I'll now kind of jump into the long-term sustainability of Guyana deepwater oil and gas. And I think I mentioned that there are sort of 2 necessary and sufficient conditions to allow a country to be a part of the supply mix when we get into the 2040s and the 2050s. And Guyana has both of those. The first one being the relatively low cost of supply. So if you look at the 2 graphs that we've presented here, the top graph shows our 2030 global oil cost of supply curve in million barrels a day on the x-axis cumulative, and then the break-even oil price in US dollars per barrel on the y-axis. And what we can see is that the Guyana's offshore fields, with a weighted break-even of $28 per barrel, stack up very well against other large oil sources. In fact, Guyana is one of the most competitive supply sources outside of the core Middle East and offshore Norway production. In fact, beating out other supply sources like the Permian Basin in the United States, Russia, and many other offshore sources. Of course, Liza, the currently producing offshore asset in Guyana, performs particularly well with a weighted break-even oil price of slightly under $20 per barrel, which is better than almost all other deepwater fields outside of Norway. And of course, the second phase of Liza has a low break-even as well at $21.9 per barrel. And you can see represented there in the dot where Liza stands in that cost of supply curve. So the break-even distribution of supply source is what we're showing on the bottom, and it really tells a very interesting story for Guyana. So that's one of the necessary and sufficient conditions. The second, of course, is the emissions intensity of Guyana production, which is half of the global average at 9 kilograms of CO2 per barrel of oil equivalent. On the top graph, what we've shown here is the emission intensity of upstream oil and gas production by different sources. So you can see that deep water is already an advantaged source when it comes to emissions intensity, and is below the global upstream emissions intensity average of 18 kilograms of CO2 per BOE. And then if we extrapolate further and look into that deep water section, which is the graph below hand, we're showing the upstream emissions from deep water oil and gas production by location. This is a 2021 figure. And you can see that Guyana is actually outpacing a number of other important offshore deep water areas like the UK, Angola, Nigeria, when it comes to that competitiveness of the emissions intensity. Now, what I would also add is that the current estimated emissions from Liza, which remains the only producing project, Liza 1 and Liza 2 project in Guyana, are indicative of what emissions will be for future Guyanese projects due to the factors listed above, as well as the fact that most state-of-the-art FPSOs will be used in future developments. So Guyana's emission intensity for producing asset actually outperforms almost 75% of global producing assets. And this is significant and very important in terms of being a part of that supply source in the long term. And I think it's really representative of why Exxon has placed such an importance on developing the Stabroek Block, as well as the rest of Guyana. I want to spend the last few minutes here discussing the Guyana's governance of the natural resource and development, because I think we all understand how important it is to avoid the quote-unquote resource curse, which has affected other developing nations that have found this oil and gas or other raw commodity bonanza. And I think that, Guyana has been from the very beginning, and particularly with this present government, very concerned about this and making sure that things are set up correctly. So I want to talk a little bit about the implementations of the government mechanisms in the institutions. You can see here a bit the historical context as well as the Stabroek, but of course the recent developments being a sovereign wealth fund, which was created in 2019 to manage the resource wealth of Guyana for the benefit of its citizens, as well as a local content requirement, which is enacted to guarantee Guyanese input into the local energy industry. Some important things to note that Guyana joined the Extractive Industries Transparency Initiative in 2017. And then if we look at some of the legislation, we have the Natural Resource Fund Act of 2019 and 2021, as well as the Local Content Act of 2021. The other thing that I want to highlight here is the institutions, because institutions survive and outlast administrations. So in order to have a really transparent oil and gas sector, you must have very strong institutions, which again are independent and can serve and sort of survive the different administrations. And if we look at the different institutions that already exist in Guyana, the Ministry of the Presidency, the Ministry of Natural Resources, the Guyana Revenue Authority, the EPA, the Ministry of Finance, these institutions will be the ones that ensure that good governance continues through multiple administrations and throughout time. I'll very quickly highlight the World Bank governance dimensions. And there is an explanation here on the bottom left of what the World Bank government indicators are, which is a yearly report that ranks each country in 6 distinct areas of governance. Each country is given a percentile with each governance dimension, and there are numerous sources that go into this. But the graph is really segregated into 2 distinct groups, one being the highly developed energy-producing countries such as Norway and the United States, which score high on government metrics. And then the other are the energy-producing countries with varying scores for governance and lower GDP per capita. Of course, Guyana ranks toward the top of this second peer group of energy-producing countries, outperforming most of Africa and most notably Russia, really almost on par with China. And of course, we believe that Guyana will have an opportunity to improve its score in the future by addressing concerns related to elections and implementing additional energy government structures. My last slide here, I want to leave is a bit of maybe room for improvement or room to grow. And of course, this relates to the EITI score that came out in 2021. What the EITI found was that there was some weakness in company reporting and tax administration processes that prevented the public supervision of oil and gas extraction revenues. However, there has been a transparency around the contracts with regards to the Stabroek block particularly. And Guyana has an ample opportunity to improve its score for its next validation by displaying material progress in the outcomes and impact category where it scored low. So I think what's interesting to call attention to here is Guyana has an industry, an oil industry that's sort of less than 10 years old, and yet it is scoring materially higher than Mexico, who has an oil and gas industry that's more than 100 years old. So I think what we can really show here is that Guyana is taking the right steps to ensure that good governance is a staple of the development of the oil and gas industry, and that the benefits of this resource will go to the Guyanese population, who are, at the end of the day, the rightful owners of this resource. That's what I wanted to share with you today. I very much appreciate this opportunity and look forward to hearing my colleagues on the call perspectives of what we've shared. Thank you again.
Well, thank you, Schreiner. And perhaps what I will do is to first invite David to, so we've heard you talk about the government take, emissions, energy transition, the role, Guyana's kind of emerging role in the sort of global discoveries, and finally the question of governance. David, do you want to take the first stab, and then we'll come to Arthur and Joel to respond to what they've just heard.
Wonderful, thank you. That was excellent, Schreiner. And for the audience, you will have an opportunity to dig deep into each and every one of these issues that he has brought forth. So just bear with us, since with a webinar, it's kind of difficult, particularly with the amount of data and the analysis that has taken place. I'm just going to mention 5 points to sort of be included in the discussions by Joel and Arthur, and then eventually Schreiner, who are really the experts on this. But I think, 5 sort of global strategic points that should be brought into the discussion, particularly as we move forward. I think first and foremost is what this means in terms of Guyana as a global player, and what I call the Guyana brand in the energy market, and the implications of that for just Guyana's overall economic development. And particularly, I think it's something we need to bear in mind. Coincidentally, next week, President Ali will be visiting Washington for official meetings with the US government, but also for a variety of discussions with private sector, think tanks, the Guyana diaspora, and so on. And I think this issue of Guyana's positioning as a global player and the Guyana brand is important in terms of what US government energy policy is today, not just because of the war and energy and inflation crisis economy at the global level, but really all the points that Schreiner mentioned, where Guyana has come from, the initial contracts back in the 1990s, now production since 2015, and how that can be maximized for US energy interests, Caribbean energy interests, and I would even say broader Western Hemisphere energy interests. So that's point one. Second point is, what does that mean for Guyana's own local resource capabilities to be able to manage all this with such a small scale population, both in terms of human resources, infrastructure resources. Schreiner mentioned the focus of the report on government governance. These are all new things which have just sort of fallen on top of public sector managers, the private sector in Guyana, civil society, citizens, and it's a big challenge. So I think that's something to bear in mind. Third, the linkage to other explorations, which the report has mentioned, what's going on in the Southern Caribbean energy basin, Suriname, what's the play with Brazil, and so on. And I think that's an important issue, not just in terms of the overall production, but what it means. Anybody who's gone to Guyana recently will find that it's like 50-something nationalities of businesses in Guyana now, bringing business to Guyana, and not only in the energy sector, but in all sorts of economic development and services and industry sectors for Guyana. So that's something importantly. Fourth is the issue, which I think has been glossed over a lot, but I learned a lot when we started this work a few years ago on energy is the importance of the new deep sea water exploration technology making this possible. How come this didn't happen in 1985, in 1995? And I think there's a message there in terms of what technology can do to leverage natural resources in countries like Guyana. And fifth, but not last, is what I believe is really going to be critical for the transformational impact on the lives of every Guyana citizen, which is what does this do to revolutionize the power generation situation in Guyana on a day-to-day basis, and what I believe should be a major objective of the government and of all the players in Guyana, which is to develop the most modern, technologically advanced, energy efficient, and climate change resilient utility in the world, because the resources are going to be there for that. And it would put to shame many of the state utilities that we have to deal with here in the United States and certainly in other countries, because at the end of the day, the goal needs to be 24/7 efficient, clean, and effective energy power for every citizen in Guyana. So let me leave those points there and then pass it on to the experts. Thank you, Terence.
Well, thank you, David. And so perhaps we can invite Arthur to offer his reflections on Schreiner's presentation.
Absolutely, pleasure being here. Thank you for having me. I think that one thing that caught my attention was the aspect of the associated gas. I think it's still up in the air, the exact amount of associated gas within the Stabroek Block. You know, there's estimates that's around 20% of the resources. So if it is 20% of the 11 billion barrels that have been barrels of oil equivalent that have been discovered, that would equal more or less, by our calculations, 13.2 billion cubic feet of associated gas, which would make Guyana the third largest, basically have the third largest gas reserves in Latin America, behind Venezuela and Argentina, who has Vaca Muerta. So I think that's something, of course, there was a lot of good insights in there, but that was something that really caught my attention, and I think is not being discussed enough in Guyana, is the potential of monetizing this gas outside of the gas to shore plant, because the gas to shore plant is only going to be 50 million cubic feet per day, right? So we here at AMI did an analysis comparing the daily production of gas in Brazil, which is around 130 million cubic feet per day. They have similar reserves to what Guyana would have if these numbers come to fruition. And as a means of comparison, Guyana would have 140 million cubic feet per day. So 50 million of that would go to the gas to shore plant, and then probably around another 13% or so would go to gas flaring or non-combustion / system losses. And then there'd be around 50% left to go to market. And that's a pretty significant amount of gas that could be either liquefied and exported to Europe or Asia, or transported via pipeline to Suriname or Brazil or any neighboring country. So I know there's several different factors that still have to happen for all of this to take place, and lots of discoveries and investment still has to be made. But that's a potential there that I think is not being discussed enough, and it's important to point out. Other things of the report that caught my attention is, I think that Guyana has done a good job in terms of institutions and approving laws that take it to the right direction, but I still think they're quite far from what's ideal. A lot of these different organizations that they're creating with these laws are concentrating power. Even though they're creating different institutions, the power is still pretty concentrated within the government. So I think that's a bit concerning. The natural resource fund is a good start, but still there's not a lot of clarity on how those funds are going to be spent. So, I mean, there's a lot to be discussed, but I'll leave it at that for now.
Well, thank you, Arthur. We're also joined by Joel Bagwandin, financial and economic analyst and an academic researcher and writer, business executive and lecturer from Guyana. Joel has been providing insights and analyses on a range of public policy, economic and microfinance issues in Guyana for the past 5 years. And so Mr. Bagwandin is a master's degree holder in business management with specialization in banking and finance from Edinburgh Napier University. And we wanted to invite Joel to offer his reflections on Schreiner's presentation. Joel?
Thank you, Dr. Blackman, for having me on this program and to share this panel with your esteemed guests. So before I share my thoughts, I have some questions for Schreiner on Guyana's take, because I did some modeling and analysis myself. The take of 59% seems a bit high. What are the variables? It seems to me you took into consideration the other unlicensed project. So could you tell, just to confirm, and then I'll comment after, how many projects were included in the model? What price did you use? What are the assumptions, the payback period, recovery period? And the reason for that is because each project has its own economics, has its own reserve. Each field has its own reserve. It has its own life. And so it has its own capex as well. So each project would have its own lifespan, NPV, IRR, and so on. So I wanted to understand a little bit more of your model to understand how you arrive at the 59%. And then I'll share what the results of my modeling, what are those? If you could answer those questions and what price you use.
Yeah, so using a long-term price of $50 per barrel, and then including, we've done this at the block level, right? So assuming the development of all discoveries. And of course, I don't want to get sort of down into the nitty gritty here because this is more of a layman's form, but I can say this, right, which is that we understand that it's 50% profit sharing, meaning that's 50% of the profit, right? That's the profit share. And then the 2% royalty comes out of the gross revenue. So you're taking things from two different buckets, right? Two different cash flows, and that's what accounts for the difference. So the 59% is the reconciled difference, including all income streams to the government, which also we are including the tax. Although the income tax is paid by the government, it is still coming to the government, so it's included in our government take figures. But I think the best way to explain it to a layman would be to say that the 2% bucket of the gross revenue is quite a bit bigger than the 50% bucket of the profit share. And that's what accounts for the difference. But Joel, I'm happy to share with you a more detailed, nuanced version of how we get to that 59%.
Yeah.
And would also refer you to the report where we discuss that.
So the story of our analysis is telling essentially the same story, but I wanted to drill a little bit into the numbers. If you're adding the tax, you're gonna double up the figures, because it's the way I treat it. It's more of an exemption, right? So it's just an accounting transaction, but that's of less importance for the purpose of this discussion. So let me share with you quickly. I took into consideration the 4 approved projects that we have, which is Liza 1, Liza 2, Payara, and Yellowtail. And so the gross revenue from those 4 projects, those Payara, Liza 1 and 2 is already producing. Liza 2 started February of this year. Payara will start production somewhere around 2024. And Yellowtail, which would be the largest so far, 250,000 barrels per day, will start producing around 2025. So when you look at the project economics for all four of the projects, you have a gross revenue at a price, I use $60, of 177 billion for those four projects, and government take is around 45 to 48 billion, which works out to 27%, and which is greater than the oil companies. In the 27% scenario, the oil companies gets 24%. So the difference with my versus yours is that you look at the entire block, and I look at the four approved projects. The story is essentially the same, which is the government will essentially earn more in terms of profit and royalty versus the oil companies. Right. So those few things. Secondly, I wanted to comment on the transparency report. What that report did not take into consideration, where it says there is not much transparency around reporting, is that, and this is, I'm cognizant of the viewers of this program, particularly the diaspora, Guyanese, and there is an international and regional audience. So I want the viewers or your audience to understand in particular that in Guyana, while we are a signatory to the Transparency Institute, EITI, I believe, um, a lot of the companies that operate in the mining sector are not publicly traded companies. And so it is difficult to obtain um, legally or lawfully the financial reports of private companies. However, those numbers, those reporting are submitted to the tax authority, which is the Guyana Revenue Authority. I didn't see the report state whether they engaged that authority to have an understanding of the reporting, but that is an important element that we have to take into consideration. Publicly traded companies are different. So I would say, I would, I am not fully in agreement with that report because of that practical situation. So, and in the area of transparency, I would say, in the circumstance, given our situation, we are doing fairly well. The production sharing agreement is a public document. The production sharing agreement of other exploration that are ongoing with other companies are public documents. We have an Information Act, which empowers media houses and so forth, that they could use that act to request certain information. I don't know if the ETI if they use that mechanism to obtain information. Because if you're going to solicit information for reporting such as that, you would have to be covered by law. I'm not sure, even the media houses, there was a recent press conference with the vice president who pointed the media into that direction. The media has been reporting a lot of things that there is lack of transparency in reporting, and the vice president pointed them to that act, which was passed since under the vice president's tenure when he was president. The question is, have they been using it? Have they been activating it to do that? And so there are mechanisms in place legally for that purpose. So we have taking into that against that backdrop, we have the production sharing agreement is a public document. So anybody who has a basic skill in math, I would say finance and economics, a basic mathematics skill, to take the production sharing agreement, understand the fiscal regime, and build a spreadsheet and calculate and build a simple model to understand what would be our projections under various scenarios. Then the reporting of the fund. When you look at the composition of the fund and the natural resources fund, the 2019 version Shriner was amended recently, and it's largely in compliance with the Santiago Principles, international principles for governance and transparency. There are several tiers of the governance and reporting structure. There is a board of directors. It comes under the Public Accounts Committee. There is an oversight committee. Um, there is another committee that includes stakeholders from civil society, professional associations. The IMF gave us a star for the composition and the structure of the NRF fund. in terms of transparency and accountability. So that is reported. So when we speak of transparency, there is a little bit of disparity which that report did not take into consideration, which of course, if they were to take those elements into consideration, therefore that ranking definitely would have to change, right? To be different.
Yeah, thank you.
So
Sorry.
yeah,
Go ahead and conclude the thought. I thought you'd
no,
conclude.
I'll stop here and hand over back to Dr. Blackman to ask more questions or engage in the discussion.
Well, we've gotten quite a few questions online, and so the first question was about what comprised the 59% government take. So I think we've sort of had that discussion, and maybe it would be instructive for folks to download the report and really dig into the details. The second question, which was kind of an interesting one, was around since Guyana's oil discovery is recent, shouldn't the emissions intensity track that of the U.S. and Norway rather than that of Nigeria and Azerbaijan? And I was wondering, just in terms of its connection between technology and emissions, and that seemed to be something that's clear from the report, that because we're using kind of more technologically sophisticated extraction operation, that the emissions intensity is decreased. Now, the question of our peer group in this regard, I think that's what's being asked. Did you have any comment on that?
Yeah, I think it was more to be illustrative of the fact that Guyana, in terms of a broader spectrum, is quite competitive. And again, I would just reiterate that Guyanese production is more competitive than 75%, of all sort of offshore production, deepwater production, and half of that global average. But as Dr. Blackman, you mentioned, we expect that emissions reduction will continue as more state-of-the-art FPSOs are installed in Guyana. And of course, these vessels now are a mile and a half away from the FPSOs of old, and even some of the FPSOs that we've seen in Brazil. I mean, these are billion-dollar vessels that are designed with this in mind. And so I think that we can continue to expect to see emissions tracking much more closely to the US and Norway, and that Guyana will actually occupy an even more exclusive space in terms of the emissions competitiveness of its production.
Thank you. So one of the, what's amazing is the way in which the time seems to just fly away on these. So what I wanted you to do, Schreiner, is to kind of have everyone take Arthur, David, Joel, to sort of just take a minute and then to give you, Schreiner, sort of the last word on kind of summing up the report for us. So I'll start with Joel. So since you're on screen, Joel, you get a minute to kind of give us the sort of takeaway, and then we'll come to Arthur, and then to David, and then finally back to you, Schreiner.
Okay, so thank you for that. So I'm going to give you the key takeaway in the context of what it means for Guyana. So certainly the key message is that Guyana is poised to benefit tremendously, to earn tremendously from the resources that we're developing. The question is, as Schreiner mentioned in his presentation, there are the risks that we're concerned about, that policymakers are concerned about, such as the paradoxical resource curse, the Dutch disease. How are we mitigating that? And so for you to understand what it means for us, you have to understand Guyana's social and economic situation historically, where we came from, presently, and where we're going. And in a nutshell, when you look at the policies of the government, looking at the government was elected in something on a document which is referred to popularly as a manifesto. When you look at that, when you look at the last three budgets of 2020, 2021, 2022, and also historically under this government, there was a national development strategy that was developed back in 1994, approved in 1996. And because of our political situation and economic challenges at the time, largely the political situation, which inhibited our growth and development over that period, over the past 2-3 decades, those the projects of that within that strategy, or largely that strategy, was not implemented in its full at its full scale. And so for the purpose of the non-Guyanese, especially the panel as well as the viewers, if you look at that document and you see the developments that are taking place, you will learn that most of the major projects, such as the highway projects, the new road projects, the bridge across the Demerara River, and so many others, the bridge across connecting Suriname and Guyana, road connecting Brazil and Guyana, deepwater ports, all these projects, even railways, the next stage of development for Guyana, we will have to start to think about railways. And I can tell you that right now in the planning process of where we're going to cut roads, new fourways, the planners, the engineers, the technocrats are taking into consideration to make provision for the event we have to build a railroad connecting different regions and so forth. So all those things were already conceptualized in the 1996 development strategy. So that document is 50 years ahead of the time on its time. Unfortunately, it has not been implemented fully. The expansion of the airport, 5-star hotel or 4-star status, and so forth were there. Fortunately, now we have an opportunity to reverse that situation. And when we speak of accelerating growth, and when we hear our policymakers speak of accelerating development, we're essentially speaking of accelerating what we should have had 20 years ago. The bridge across the Demerara River, for example, was supposed to be built since 15 years ago. The Amila project for hydro energy was supposed to be built and developed 10 years ago. So today, without oil, we should have been the beneficiaries of these projects already. So what this means, what we've presented here, what this resource means, we have a beautiful opportunity to accelerate that so that this generation and the next generation and other generation can benefit from that. So that's what I want to say, contextually, not just the key takeaway from the presentation, but what it means for Guyana.
Broadly. Yes, yeah. No, thank you, Joel. I think that's a really eloquently stated. And, I wanted to sort of pitch to Arthur. Joel gives us a really kind of comprehensive look at some of the things that have been in the train for a long time. And he asks us to have a more nuanced look at some of the potential improvements in the area of transparency. Maybe you want to just kind of come back to this for a brief moment to kind of maybe engage Joel's sort of nuanced view in this regard.
Sure. Yeah, I think that Joel makes a good point by saying that these projects have been part of the plan for many decades. But now that Guyana actually has the money or the money's coming in, it's really time to implement it, right? I was recently in Suriname for a different conference, and it seems like Suriname has been able to do more in terms of infrastructure. There's the roads are a bit more developed, the bridges are more developed, but in terms of resources in the past 30 years, it's pretty similar. So why was Suriname able to develop that in a more robust manner? So that's something that you gotta evaluate and consider going forward. Guyana has the money now. Will it be able to put it to good use? And that's hugely connected to the transparency point that you're mentioning, Terrence, because um, this is the biggest downfall for oil-rich jurisdictions, is the fact that they're unable to spend it appropriately, and they're unable to hold those funds accountable. And there's a lot of cronyism, a lot of favorable contracts towards friends over inflation and pricing. We haven't seen that in Guyana yet. I'm not saying that we have. The money is just starting to come in, so now is really the time where these things start to happen. And just the last to mention is, it's important to put Guyana's discoveries in the wider context of the energy sector and the transition that's inevitable, right? It seems like we're pretty much at capacity in terms of oil production. I think Saudi Aramco just came out a few days ago saying that at peak that they can probably produce 13 million barrels per day, and they're around 11 million barrels per day right now. So as energy demand continues to increase around 2.5% per year, we're going to need other types of countries and other types of resources to come in and fill that gap. Of course, renewable energy is going to be a huge part of that. Energy storage, natural gas when possible, but oil, and especially oil that's low in emissions, low break-even costs, like the one in Guyana, has a major role to play in the next 20 to 30 years. So Guyana has a really, really unique opportunity here to capitalize on that. But, last point is, try not to squander it, and to make these assets that you're developing for now to be transition ready. If you're developing an LNG export terminal, make sure that you can also export low carbon fuels like hydrogen, renewable natural gas in the future. You got to start thinking about those things, even though they're 5 to 10 years in the future.
David, we're at this really exciting juncture. There are a few kind of potential tripwires. Can we do it?
Thank you. I'm just going to be very quick. I'd like one point for Schreiner to share some insights with us. He did mention the importance of the technological development with the FPSOs, and I'm wondering if the Rystad report on the work you've been doing, anything with regards to the more recent discussions taking place in Guyana about a national oil company and what that does in terms of management efficiency and productivity and so on in the country. I think at the end of the day, what everyone is really pointing to is, and we've seen this in many countries, not just in developing countries, but even in advanced economies, institutions matter. And for institutions to work and execute and manage properly, we need people, trained people, people who with the development of human capital. I'm on 2 boards with the University of Guyana, one on business, another one to celebrate the 60th anniversary. There's a big focus in the country on that in terms of bringing people up to speed with the needs, not only in the energy sector, but in the rest of the economy, as Joel has mentioned. So these are things that are going to be needed. And it's not just a matter of having the resources, but then having that institutional capability and the management capability. Thank you.
Schreiner, you want to jump in here?
Yeah, what I would say is that in my travels to Guyana over the past half decade, let's say, I've really gotten a sense of the Guyanese people and the pride that they have in being Guyanese. And although there may be superficial kind of truncated issues, I think at the core, what I've always seen and what I have picked up on is that people are very excited about this opportunity. They want to participate. You have people from the diaspora coming back to Guyana and bringing that knowledge and that know-how that was obtained elsewhere. People understand how important education is, and that's one of the things that I've advocated for from the beginning, is setting up an education fund so that you can send young students off to pay for their education, not necessarily to become petroleum engineers, but to become all those other things that a civil society needs, lawyers, doctors, the accountants. I mean, things that are tangential to the oil and gas industry. But I think that really the success or failure of any country comes down to its population. And when I see the Guyanese people, when I interact with Guyanese colleagues and friends, I get a sense of optimism, and I get a sense that we're all in this together, and we all want to see this succeed. And so when I leave Guyana, and I'll be there in the next few weeks, I always enjoy my time there. I think about how the future will progress, and I think that the population is ready and willing to do the things that are needed to see this succeed. So as long as government mirrors that same sentiment that the population has, then we'll see this as a success story in a 21st century reversal of the tragedies that were seen in the 20th century with regards to the resource curve.
Thank you. Thank you. This has been a really wonderful conversation, and I think that we've hit upon some really, the report sort of really hits upon some key issues which have been a part of the Guyanese discussion, the question of, the government's take and what exactly is that. And so I think that there is some clarity there. The questions of our emissions and, how we approach the energy transition. And so I think that there's, again, some emerging clarity there, sort of, the broad sense of Guyana's brand and its role in the global context. And more importantly, this question, and perhaps most important, this question of governance and how we build the kinds of institutions that are necessary to really grasp this prize. And so, on behalf of the Guyana Business Journal and on behalf of the Caribbean Policy Consortium, I again want to extend my thanks to all of you here today, to all of you who've joined us as viewers and added questions to the program. And I want to say that the report will be available on the CPC and the GBJ website, and I hope you dig into it as I will, and we look forward to continuing this wonderful conversation about the growth of Guyana, this place that we love very deeply. So, colleagues, thank you, and have a wonderful day. Bye-bye.
Thank you.
Thank you all. Take care.
Thank you.